Hey, good afternoon, everyone. Trader Tim from eminimind.com doing a Monday market analysis video. Today we're going to look at some of today's trades. We'll take a look at Friday's trades as well as where we have come now on the bigger picture. So let's start with the break we had in the ES last week. That break being this big triangle pattern, however you want to draw your anchor points, if you want to use the low or the hammer's tail low, it doesn't really matter. The more important element is the break on Friday above sort of this downtrend that we had. And not only was it, a short-term downtrend, but because we made higher lows at the same time we put in lower highs, forming this triangle, getting tighter and tighter and tighter towards this 2720 area. Once we got that pop on Friday, boom, the gap up. I drew up the most recent swing high and looked to that point, which was about 2790s. I looked at that point as sort of the next magnet, and it's exactly where we went to on Friday. Today's spinning top price action, not really of huge concern. We had some good structure in the market the last couple of days. We'll talk about that. Even here, if we roll over, like let's say we come back to the next 50% retracement even before we touch the negative 23% target. We've got the long down here at 2660. Sometimes we don't go straight to the target. We pull back beforehand. Well, even if we do that, if we just draw from lows to today's highs, you can see that pullback puts us at the top of this downward trend line, and that's a healthy place to be. You've got what was resistance would now be support back here at 2720s, and we have a 50% at 27, we'll call it 25s. So good things happening in the markets, definitely some good signs pushing the markets up, but even if we do get a little bit of a rollover, I would just see that as another opportunity to be able to get long here at 27.25s. My breaking point, if you will, that this break to the upside is failing is if we come down and break this swing low and break the 61.8. That would be a very bearish sign, and I would look for us to come down, not just retest lows, but break through these lows and then put in another big, Dow minus 1,000 day with a close where we rally and form another hammer candle like we did back here. So that could certainly happen, but in the meantime, we'll play what we see. You want to be able to, disconnect yourself from what bias you might have or opinions you might have from and actually trade, what's in front of you. Trade what you're seeing. So let's take a look at today's trades. This morning, the first thing I noticed, I'm going to bring this back up here. The first thing I noticed as we opened was obviously a move higher. I'm going to go to a 30-minute chart so we can get a better picture here. So here we have Friday's straight up price action. Notice none of the candles broke the previous candle's high. And that trend continued this morning. We had the gap up, and the first two candles were inside. The second candle was inside the previous one. Notice how on Friday, the second candle broke the previous candle's high. So, that kind of told me, okay, well, we might consolidate and move sideways to this this sort of trend line here. Might move sideways a little bit before moving higher, or we could break the trend line and move lower. So the first thing I did this morning was draw up high and low of that first 30 minutes and wanted to see how we traded. And low to high, got a bounce, but didn't get follow through. So then I removed that drawing, and I drew highs to lows, and I noticed, okay, not only did we get a retracement, a bounce off of that level, but we had some follow through, and that follow through broke lows by a smidge. And not only that, we traded nicely at the 50% down to the negative 23. in the past couple of weeks, we've been seeing the first hour's range be, pretty choppy, not really a clear pattern developing, and then a better trend developing later in the day. Well, Friday, broke that trend. We started trending, if you will, to the upside, and then continued all day long. So right off the bat today, I noticed that we traded at this long. We had a nice bounce, but didn't get the follow through. But we stopped right at the 50, and then I drew up the short, and I noted, okay, we stopped right at the short here and started selling off. So when we came down and broke the low of the morning, that was my sign to just draw from this high at the 50 down to lows and then take the next retracement short, because that was the developing trend, and I've been seeing participation at the 50s, right at the 50%. So 27.95s and a quarter was the short here, and that moved really quickly, which was great. The market, when you get participation at the 50%, you should have a quick reaction. When the market's kind of undecided and in choppy territory, that's when you just sort of hover around the 50% and trade, what I call, trade into the 61.8. It's very dirty. It doesn't just cleanly come to the 50 and then sell off. So we were starting to see some good patterns this morning, and I was picking up on some of those trends. So the distance here between the 50 and the 61.8 was very small, so easily a 6-tick stop. If my entry was 95 and a quarter, 6 ticks is going to put me outside of the 61.8, so that was a healthy short, totally valid. We had a nice little sell-off right to the negative 23. That's where I always put my first target. So let's say you have two contracts. You can take one off at the negative 23 and then try and trail the second. And what I did today, because what was working last week, was to simply draw up the next retracement and put my stop behind that 61.8. That had a lot of success in the last week or two, and so rather than get super aggressive, you figure taking, if you've got two contracts, taking one off at the negative 23 and trailing the second. If you've got four, you can just double that, take two off the negative 23 and then trail the second. And so on the way down, I was just trailing, the swing high to the next major swing low, trailing that 61.8, and same thing, swing high to the next swing low, and then that's where I got taken out down here at 87s. But rather than having to close out of the trade and then re-enter, every time you re-enter, you put on new risk, and so it's much more productive to get into a trade and then try and stay in the trade. Let it come back a little bit, have your line in the sand, have your stop in place, but at least try and stay in the trade as long as you can. Now, if you have one contract, it is good practice and good habit to set your target at the negative 23 and get out. It really helps to develop the rhythm and develop the execution technique. But as soon as you can get to two or more contracts, now you have the ability to take one off at the target, tighten your stop to just above the swing high, and then trail the second. And 3 is a good number too. You could take one off at the negative 23 and then trail the second 2. Or even trail the second 2, and then if the market does make a big spike down, you could take one of those 2 off at sort of an arbitrary level, and then leave that last one on as a runner. So that was the first trade, and then I noticed, actually, let me pull over the market profile. Something I noticed. We were coming down this morning, and the point of control from yesterday was over here at the 83s. And the market was coming down, and so usually at the point of control or at value area high or value area low, there's a good chance that we'll get some sort of bounce, and that's exactly what we got here, down here at 84s. So rather than just trying to buy at a low point because the market has moved down, I just waited for the market to break the major swing high. And so we started to rally and break these swing highs. So the first thing I did before I even drew up the setup was to note where the full halfway back of the day was. So I drove from highs all the way down to lows. And I just want to make sure, we don't stop there. If I'm taking a long, I want to make sure we didn't stop at the short first. So then I just drew up from lows to highs. I noted that the distance here, a 27/88, put the stop at 86/50s. So that's just outside of the 61/8 here. So I got safe stop clearance. And so this was a valid setup. We broke the swing high and just drew from lows to high, let the market come down, take that long, and then again set the negative 23% target, which, oh by the way, lines up with the 50% short above us. So I was anticipating, okay, we've got room to go from 88s up to 93s. And so again, using the first, if you've got two contracts, at least taking one off at the negative 23, then trailing the second. And same thing, you can trail the 61/8. In this case, since we had participation at the short, we had it touch 1, 2, 3 times. I kind of brought my stop up a little bit closer and put it underneath the swing low, because you kind of have to ask yourself, well, what is the sign that the trend is now changing to the downside? Well, we first have to break a swing low, and then we can draw from highs to lows and then look for a short. And notice that we did have a little bit of a participation here. That got me out of the trade underneath this swing low. And the first half out here at the negative 23, and then trailing the second half and got taken out under the swing low. So that's kind of how I looked at the markets and traded things today. If we go back to Friday, and then we were about a couple hours into the day, and that's about as late into the morning that I usually trade and put on new positions. On Friday, I drew up a very similar scenario. We had an opening range develop. So I drew the high and the low of that first 30 minutes. And I noticed right away that within the trend, within the first 30 minutes, an hour on Friday, we started to develop. Actually, yeah, it was the first 30 minutes. My eyes were fooling me. We don't do daylight savings time here. So now we open at 6:30 in Arizona, but Friday it was 7:30. We were still an hour later. So right in the first 30 minutes, I noticed this higher highs and higher lows trend start to form. And I noticed that, as you probably did, okay, we had this big gap up seen here. And a lot of times you do not get, if it's going to be a gap and go day, there aren't many opportunities to get into the trend. So being Friday morning fairly early, before 8 o'clock, I saw this trend developing. We had already gapped up. So I just drew from lows to highs of when we broke out. Notice I didn't pull this high here because we were still within the first half hour's range. I let the market break out and show that, okay, there's some follow through. Pulled to that high, and then again, nice clean touch. Used the negative 23 for the first target, and then trailed my way up by using, first the negative 61/8 trail, and then as we started to get up higher here, on these little moves up, if I were to just draw from lows to highs, the 61/8 was pretty far away, and we were kind of moving straight up at that point. So I just moved my stop 2 ticks below each of these swing lows, and it ended up getting taken out right over here. We had a short-term pullback, if you will. Didn't last too long, but the market continued upwards from there. Notice, leaving the stop below the 61/8 is definitely a productive way to trail your stop. You just kind of have to ask yourself, are you willing to risk, when price is up here at 73s, are you willing to risk, in this case, 4 points to have the market come all the way back down to that 61/8? Later in the week, I'm not as aggressive, And so the answer on Friday was no. So that's why I tightened my stop a little bit. But then what ended up happening, we got this little pullback, and it happened to line up nicely with the next long setup. Had a little bounce, traded a couple times at the 50%, and I kind of saw that as an opportunity of, well, the market was moving higher every single candle, not breaking the previous candle's low. So I just drew from high to lows, waited for that 61.8 to break, and then when it did, because we already traded at this bigger 50% long, I just got in again, drawing from lows to highs, letting the market pull back, putting my entry, a tick in front of the 50. So if it does make a clean touch like this, you can get in, and then once again, just this time using the negative 23 of the larger 15-minute here, or the larger setup, instead of this smaller one here. So I use the smaller entry, but I use the larger target. And then just trailing my stop once again. And then ended up getting taken out underneath this swing low up here. Again, being a little bit more conservative with my stop, trailing a little more aggressive rather, trailing each swing low on Friday just because it's later in the week and I don't really want to give up a lot on a Friday. You've already kind of banked your week, and I just didn't need to sit there with a stop that's super far away. Already had one winning trade, so just trailing each swing low worked well on Friday. But on a day like today, kind of starting off the week, you don't really know what the trend is going to be like. I was okay being a little more conservative with my stop. We've got the entire week ahead of us, and ended up being a pretty good day. So that's how I traded Friday and Monday. Tomorrow we'll be doing a live trading session as always on Tuesdays. You can check that out at eminimind.com/VIP. And if you found the video helpful, give it a thumbs up below. And don't forget to subscribe to the eMiniMind YouTube channel. Thanks everyone, and have a great week.